Good afternoon and welcome to BizTech's Asian Midday Market Watch, powered by the Private Pension Administrator of Malaysia, or PPA, which is the central administrator for private retirement schemes. It's Tuesday, the 18th of April, and we have Jessica Amir, who's a market strategist at Saxo Capital Markets, coming to us from Sydney, Australia. Now, Jessica, it's always great to have you on the show.
Great to be back, Brian.
Now, Jess, before I get your insights, we're going to take a look and see how all the numbers across the region stack up. We start with cryptocurrencies, and Bitcoin is at 29,503. It's down 1.61%. Ethereum is at 2,082. It's down 0.7%. Now, looking across the regional stock markets, we start over at Singapore. The Straits Times Index is down 0.48%. Bursa Malaysia in KL, the KLCI, is down 0.3%. The Shanghai is down 0.01%. The ASX All Ordinaries is down 0.49%. The Nikkei is up 0.45%, bucking the trend. The Hang Seng is down 0.82%. And rounding up the numbers, we've got the Kospi, which is down 0.38%. More downs than ups. Jessica, tell us why.
Yeah, there's a lot to go through, isn't there? So we've just not long ago had better than expected economic news out of China. So that's good. We are seeing some broad-based gains come back onto commodity screens. But all in all, we do have some of the biggest banks reporting on Tuesday in the US. So I guess the markets are really waiting to see what they can sink their teeth into, knowing that so far bank results have been mostly better than expected. But there's a lot on the line this week with other companies such as Tesla and Cattle out later this week.
Now, I want to start first with China. The GDP numbers came out above expectation at 4.5% year on year. That was higher than a Reuters poll of 4%. How should investors be playing the Chinese recovery story?
Well, I guess there's many ways to skin a cat. So we've seen the Chinese currency, the CNH, bounce off its low. So that is perhaps one way that clients can explore this better than expected reopening or recovery of China. So looking at FX. Another way might be, of course, to look at equities and ETFs that are exposed to China. So if you have a look at Saxo's, I guess we track a basket of stocks that are exposed to the Chinese consumer and China technology sector. And we've seen this equity basket rise considerably on the back of the better than expected bevy of better than expected economic news that we've had from China. So lending, GDP, and we also await industrial production numbers. So I guess clients can look at those stocks that are exposed to the reopening. And then another way is to look at resources. So we know that resources, i.e. one of those being energy, we are expected to see higher prices in oil later this year. And indeed, the copper prices continue to move up off its lows. So commodities, you can look at our commodity equity theme basket, or even just look at the oil price, copper, as well as those key companies that play in this space. So you've got Occidental Petroleum, you've got BHP that has just become the world's biggest copper company. So there's many ways to skin or play that reopening trade.
Okay, I want to talk about one particular commodity, lithium. And we're starting to see a shift in terms of alternative sources, in terms of alternatives to lithium batteries as such. What are the stocks that we should be watching out for that you've mentioned in your commentary, for example?
So there's a company that's called Cattle, and I guess it's an interesting name. The full name is Contemporary Amperex Technology, and this is actually the world's biggest producer of batteries. Now we know this company traditionally produces lithium-ion batteries, but they've previously said that they're going to beef up production of sodium-ion batteries. Why? Well, they're significantly cheaper to produce than lithium-ion batteries. So, of course, one stock to watch would, of course, be the institutionally stock that you can trade on the Chinese market, and that's Cattle. And then, of course, you've got BYD that's also trying to I guess, attempt to become the world's biggest producer of sodium ion batteries. So previously, BYD said that they're looking to do a mass scale out of sodium ion batteries. So you've got these two very large companies. Of course, BYD is looking to considerably save their costs if they do intertwine sodium ion batteries. So, of course, those companies are great examples. And then, of course, you've got Tesla. If Tesla does start to use sodium ion batteries, that would mean their margins might essentially be improved because they'll be dropping their costs. But also, this pretty much shakes up the lithium space. So if we do really see a mass scale rollout of this new game-changing technology, the lithium price is probably going to face further significant pressure, and that means profitability of lithium companies will probably be squeezed. So indeed, keep your eye on lithium stocks. There's many in the market. You've got Ganfeng, Allkem, Pilbara Resources. There's many companies to watch. You can look at Saxo's lithium basket, but yeah, we are expecting a big shakeup in the lithium sector.
Now, Jess, you alluded to investors watching bank earnings. Bank earnings have been ahead of the curve so far, beyond ahead of expectations. What should we be doing? And you mentioned in your commentary perhaps an ETF we should be watching out for that we could perhaps take advantage of.
Yeah, spot on. I guess really to set the scene, we have had better than expected bank earnings. So far, out of the five banks, the five major banks that have reported, Brian, four have actually beat expectations. So this is why we are seeing the KBW index rise up off its lows. And we're starting to see investors bite into this ETF. Now, the ETF that tracks this is the KBW Bank ETF. And I believe that ticker is KB. W. So you could keep your eye on that. Now, interestingly, some investors think that they've missed out on the bottom of this ETF, but it's really worthwhile noting that it has been stuck in a trading range for some time. But it could continue to rally up off its low. It's already above its 21-day moving average. And if we do indeed see better than expected results from Bank of America, Goldman Sachs, and Morgan Stanley, who report this week, not only will we have the technical indicators suggesting that there's likely upside, but then we have the fundamentals. So you probably will see potentially a large move to the upside. So this is something that we are continuing to watch very closely, given that we're probably going to see some institutional traders move in a big way into this index and ETF. Again, as long as we do see better than expected earnings from those three big banks coming out, and then it could be, I guess, a marriage of fundamentals and technical indicators supporting a potential rebound.
Now, Jess, as always, thank you very much for your insights. Thanks for coming on the show.
Thanks, Brian.
Now, we've been speaking to Jessica Amir, market strategist at Saxo Capital Markets on BizTech's Asian Midday Market Watch, powered by the Private Pension Administrator of Malaysia, or PPA, which is the central administrator for private retirement schemes. I'm Brian Fernandez. This interview will be on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.